Right. Today, I'd like to talk about BOJ, the Bank of Japan holds rate steady. So what's next for the market? I think that is crucial to understand because if you are looking for long-term rates, right, if you understand this, what Japan is doing, the Bank of Japan is doing, you could actually plan and have a longer trading scale time frame. Right. The Bank of Japan decided to maintain short-term interest rates at 0.25%, as expected during their recent meeting on Friday with the unanimous support from all 9 members of the rate-setting board. Now, the Bank of Japan anticipates that the Japanese economy will continue to grow at a rate surpassing consensus expectation. Additionally, they project a gradual increase in inflation in the coming months, as indicated by the underlying consumer, driven by anticipated increases in inflation and private spending due to higher wages. To date, inflation trends have aligned closely with the BOJ's projections. Now, this is something really crucial. Okay, so because if we have something that is based on BOJ's projections, this could mean something important, which I'm going to reveal in a very short while. Now, the recent rise in inflation is largely attributed to significant wage increases secured by Japanese labor unions early this year, with the effects now being felt nationwide. We have discussed about this previously already, right? So the increase in inflation also indicates a robust improvement in Japanese economy, particularly in terms of private consumption. Consequently, the BOJ is anticipated to further hike rates potentially in December. There are talks about the rate hike in November, but I'm pushing it to December, but we'll see as the time comes with more in economic data has been reviewed. So based on predictions that inflation will continue to rise in the coming months and into 2025 based on this. Now, so Governor Ueda of the BOJ has stated that the central bank is prepared to continue raising interest rates should the economy and inflation adhere to its projections. Remember earlier on, I told about them being following, adhering to projections. We already have that, right? So this is something that you need to take note of, and that could actually change how the dollar yen move. Okay. Now, meanwhile, the Federal Reserve embarks on a path of rate reductions. The BOJ is moving in the opposite direction, likely leading to a narrowing of net interest rate differential and a strengthening of Japanese yen against the US dollar. Now, if we want to put a target to it, the economists are predicting that the dollar yen could revert to trading within the 138 to 140 range. And with the dollar yen right now at about 144, right, we still have 400 pips to come to the 140 range. So that could represent a good profit. Okay, so be on the lookout for that, right? This scenario could reignite volatility in the Forex market, especially if there is a resurgence in unwinding yen carry trades. Now, it's said that whatever carry trades that has been not done early on, all those have already unwound, and we should have a fresh set. But I think that reset, fresh reset right over here. But I think there are still some carry trades right around, and that could potentially reignite the volatility, okay, if there still are. So in response, potentially extreme currency volatility that deviates from economic fundamentals and negatively impacts Japanese businesses and households, Atsushi Mimura, Japan's Vice Finance Minister for International Affairs, basically this position is like the go-to guy for foreign exchange controls, right? He basically affirmed that the authorities are prepared to intervene as necessary. So this is something that you need to look out, and that could happen. Okay, so for the dollar yen, whenever it makes a new swing high, I will be looking for places to sell it. Okay, so that's the news for today.